Good morning. So my name is Kristy Duncan, and together with Jesse McWaters, my co-presenter, I'm the founder and CEO of Women in Payments, and Jesse is an economist extraordinaire with the World Economic Forum. It's our pleasure to be here, and I'd like to thank Payments Canada, I was going to say the CPA, for inviting us here to share this presentation with you. We're going to I'll do this thing. We're going to talk about Canadian payments, past, present, and envisioning the future. I'm going to talk about the past and present. We're going to leave the future to Jesse. So it's our pleasure to be here today and share this with you. I don't know about you, but I kind of consider myself a little bit of a payments geek. I started Women in Payments 5 years ago with the objective to get a whole bunch of women in a room to talk payments for a whole day. And I was thinking if I could get 50 women in the room, that would be fun. And we got 160 in year one. And I was so excited, 160 people, just to talk about payments for the whole day. And in year two, we had 250. And in year three, we had 350. It was so exciting. So now we're doing it in the US and we're doing it in Australia, and it's all good. So if you also, like me, consider yourself a bit of a payments geek, you are in good company. So I'm going to talk about the past and a little bit about the present of the payments system today. And in doing this research, I reached out to a number of Canadian banks and was fortunate enough to connect with their archives department to get some visuals. And what I want to share with you is kind of my version of a visual history of the Canadian payment system. I apologize because clearly in this 15-minute presentation I was not able to capture every single thing that happened in the history of the payment system, and I apologize because I'm certain that some items have been left out. But hopefully this gives you a nice little flavor and kind of history of where we are from the last 100 years or so. And in doing this research, I've come to the conclusion that there are three overarching themes that have been quite consistent over the past 100 years, and I hope that you'll agree with me that they remain very pertinent to the market today. And it starts off with the whole security and risk management, really playing into the safety and soundness of the payment system, and that we as the payment system players in this market, we are the custodians of the safety and soundness. So having that security in many forms, and I'll talk about them, is of paramount importance. Second of all, that's come through is the whole concept of the customer service and convenience. We're really serving customers and wanting them to have the best possible services and payment solutions available to them in the market, bar none, and that's within the Canadian market and globally. And last but not least, of course, is the concept of efficiency, trying to increase the speed of processing, driving out the costs, and we'll talk about that as well. So I'm going to start about 100 years ago with a Bank of Toronto $5 banknote. And you'll notice that this is a note that was drawn on a private commercial bank. It wasn't until 1935 that the Bank of Canada, our central bank, actually started issuing banknotes. The next one is one of my favorite photos. So talking about security, in the olden days, 100 years ago, security was really managing the physical assets, the physical aspects of the cash and the checks and the physical pieces of payments that we had in the system. And so this bank vault is actually a photo of the it's now TD Bank's vault at their King and Yonge branch in Toronto. I actually used to work in this building. I love this. It's just such a great iconic photo, and I think this vault actually appeared in a Batman movie. A check drawn on the Imperial Bank of Canada from 1923, and also getting back to Security Bank of Montreal, an armored truck circa 1923. I got my first live poll question, so everybody pull out your little apps and see if you can answer this question. So if you can tell us, when do you think the Canadian banks first adopted magnetic ink character recognition, or MICR, to encode and process checks? Was it 1963, 65, 69, or 72? How's our, oh gosh, our techie's gone. Everybody ready? Okay, he's supposed to be displaying the results. Whenever you're ready, if we can display the results. Okay, technical issues going on. Oh, okay, we're going to go back in time. Okay, we're still working on that. Perhaps I will continue and we will try to come up with those results for you momentarily. Going back to the security thing, I love this photo because it's a picture of a permit, a weapons permit issued in 1933 by the RCMP for branch security staff for protection of branch staff while carrying bank monies or valuables. And I was really struggling because I had another photo from a Royal Bank supplies catalog from about the same era that had two very interesting items in it that could be ordered by branch personnel. And one was a revolver, and the other was ammunition for the revolver. So these were things that could be ordered by the branches from their main supplies store center to help in managing the security of the payments. So fast forward now to the 1960s, where we start to get into the computer age. TD installed their first computer in 1962, and as we all know, probably the computer that you see being operated in this room probably had less computing power than each of you carries in your pocket and your cell phone. But it was a good start.
I think it's still running.
Thank you, Andrew. We had some really, I love this one from Bank of Montreal, their Genie Center. And Genie is an acronym that stands for Generates Information Electronically, doing check processing. And the answer to our first poll question comes up here. It was 1963 that the Canadian banks adopted MICR for encoding and processing checks, kind of getting us into high-speed check processing. So that was all good. Okay, I don't know. These poll questions, our tech is gone. So I'll pose the question and we'll get to the answer shortly. So when was the Society for Worldwide Interbank Financial Telecommunications, better known today as SWIFT, founded in 15 countries by 239 banks? And we heard this morning they're now in over 200 countries, so they've come quite a long way since either 1969, 1973, 78, or 1981. How are we doing with the answers on our live poll? Working on it. Okay. Let us continue. Still in the 60s, we continuing with this whole magnetic technology. It's driving new products that we can offer on the card side. So as we heard this morning from Visa, it was 1958, I believe, that Bank Americard announced or launched their first credit card. 1968, in Canada, RBC launches its first Visa Classic credit card. CIBC had launched their first ABM, or ATM as some people call it, in 1969. Shared cash dispense, shared cash dispense will follow. And the answers to our second polling question was 1973 that SWIFT was first formed to facilitate global payments through a network of global banks. And because I'm women in payments, I had to put something in for diversity. So in the 70s, the banks started to become more aware and plugged into the whole concept of diversity. And Mona Campbell in 1976 was the first woman to be appointed to TD Bank's board of directors. Okay, I have another poll question. And the techie's still working on it. So ACSS, is there anybody in here who does not know what ACS is or stands for? Yes. Okay. So ACSS is the Payments Canada's system that it stands for Automated Clearing and Settlement System, and it's the system that clears interbank all of the high-speed, kind of low-value, high volume payments. So it was launched in one of 1979, 84, 89, or 92. And we will get to that question, unfortunately not quite yet, but shortly. I'm now going to start doing a top line on this timeline and just kind of put our Canadian payments timeline in a context of a global payments timeline. So 1976, Apple Computer was formed by Steve Jobs, Steve Wozniak, and Ronald Wayne, which I thought was very interesting because 4 years later, the Canadian Payments Association was created by the Canadian Payments Act to operate a national clearings and settlement system and plan the evolution of the payment system in this country. The 80s brings increased automation and interconnection between the banks, payment networks, and processors, starting with the creation of the Canadian Payments Association, and then followed in 1984 by the launch of ACSS, to connect 14 of Canada's direct clearers using IBM's new personal computers. Wrong button. Also in 1984, 5 founding members of Interac linked their ATM networks to form a broad national cash dispense service. So this is kind of where Interac starts to take the stage in connecting banks and payment systems to give consumers a convenient way to access cash across the country. And it was really instrumental in developing our payment system. On the top line, you see, though, 3 years before that, we're using MagStripe technology for the shared cash dispense service in the banks in Canada. In 1981, France was starting the trial to test their chip cards for a smart card trial in that country. So that was something that really pioneered chip technology across the globe for debit and credit card transactions that we're still working with today. All right, no poll question here. 85 was the release of Microsoft Windows 1.0. We've come a long way since then, but very interesting to put this into perspective. Quickly, 1986, ACSS was cloned to start clearing and settling US dollar items in the Canadian market. 1992, CIBC, first Canadian bank to offer nationwide automated telephone banking. The banks still do telephone banking? Interac initiates a multi-bank pilot for point-of-sale payments in 1992, 8 years after the launch of their shared cash dispense. What we're seeing is the banks getting more and more connected to be able to offer nationwide services on a more electronic and digital basis. CPA in 1992 launched an EDI payment stream. If you're not familiar with EDI, it's a B2B facility that facilitates high value, higher volume B2B payments on a potentially same day but final and irrevocable basis. So unlike ACSS, which was more kind of one-off payments which didn't carry a lot of information, EDI allowed the payment and the data to travel together through the banking system on a B2B basis. And that still runs today. Continuing on this digitization and electronification of payments, we're we're starting to now get into the consumer payments market. So the banks in the 90s were looking at how do they use this new technology, the internet, to connect with consumers in the market. So we have TD launching their EasyWeb product in 1994, and the CPA is also starting to facilitate more banking at a consumer level electronically through the internet by putting in place a bill payment mechanism based on a corporate creditor identification number, CCIN, to improve and speed the processing of bill payments. Quick question at the back. How are we doing on our poll results display? Yes, no? Maybe. Okay, so let's try this one. This is my second last question. When was email money transfer launched by Certipay with 4 leading banks in Canada? 1998, 2002, 06, or 2010? Everybody got their app? Punch in your number, very quick, easy. Let us know when you can display some results. Working on it. Drum roll, please. Okay, he's putting me over time. Poor Jesse, sorry.
No?
Okay, so can someone tell me the results? Anybody? 2002. All right, you guys are good. You guys are good. I am impressed. Really, in the 90s and early 2000s, we're continuing that migration to electronic payments. And 1997 was the first year that the CPA, as it was known at the time, cleared more electronic payment items than paper items. Moving forward, LVTS was launched in 1999. LVTS, for those of you who aren't familiar with it, is the Large Value Transfer System, which was designed to take, it was essentially an interbank high value payment clearing and settlement system, which was put in place to manage some of the settlement and systemic risk in Canada, and it offered a deferred net settlement providing intraday finality and using SWIFT messaging as its basis. So that was really instrumental in helping to manage the systemic risk in the Canadian market. But as we speed the processing of payments and settlements, big or small, we're really working to reduce the risk and take the risk out of the system. So we see that in the implementation of LVTS. We also see it in the adoption of, and Canada joining to use CLS. And CLS was continues to be, it's called the Continuous Link Settlement System. And it's a global interbank facility that allows banks to settle global FX transactions in real time. And that again was another strategy used on a global basis to help pull some of the risk out of the system. So that was all good. I need to keep moving here. Again, pulling risk out of the system, 2003, CPA capped the value of checks so that jumbo payments, anything over 25 million, was no longer acceptable to be processed by check. It had to go through LVTS. Interac in 2005 launched Interac Online, and the CPA created a payment stream on ACSS to track those and clear those payment items. In 2009, CPA introduces a rule to allow consumers to purchase using chip cards at the point of sale, with or without a PIN. That was very novel. And in 2013, we had an image rule project which allowed, which CPA used to enable interbank exchange of check items by image, which then allowed the banks, the financial institutions, to offer both consumers and corporates a way to do check deposits via image. All right, last question. When did the Bank of Canada designate ACSS for oversight under the Payment Clearing and Settlement Act? Was it 98, 2005, 2012, or 2016? Hey, good job.
Oh.
All right, so we're tied between 98 and 2016. And the answer actually is 2016, which 35% of you got right. Excellent, good work. Yeah, that just came out a couple months ago, so the work is now being done to put in place all the things that we need to do to make that happen. And again, this is all aimed at reducing and managing the risk in the system. There we go. Okay. So CIBC was the first of the Canadian major banks to offer mobile check deposits in 2013. As we get into the current the current year, we're really looking at new technologies like blockchain. We've got R3 announcing their multi-FI partnership to design and explore use cases for applied distributed ledger applications and technologies in global financial markets. We've got other new technologies: mobile, bioauthentication, artificial intelligence, Internet of Things, cognitive, etc., continuing to drive the evolution of the Canadian markets at an accelerated pace. And the other thing I just want to point out is it's very, very apparent, and I think you'll see this time and again throughout the next few days, that we got these new entrants into the payments market who are starting to really change the perspective, and they're coming at it with a fresh look at payment solutions and ways that we make payments in our day-to-day lives. And I think it's good that they're questioning and offering new solutions, new approaches to what has in the past been perhaps a slow-moving market, but we're now being driven by technology, which is moving at an ever faster pace. So 3 key themes being security and risk, and emphasizing the safety and soundness of the payment system, the customer service and convenience, as well as the efficiency of the system. And I'm now going to pass over to Jesse.
Thanks so much, Kristy, for I think a fantastic overview of payments past and present. And in a sense, I have a much easier job in talking about the future of payments, because if I get it wrong, you won't be able to call me on it, at least not until the next payments panorama that we have. But at the same time, I think we all know that thinking about the future of fintech and the future of payments more broadly is a real challenge, right? It's difficult to tell what's going on. And about 2.5 years ago, the World Economic Forum, where I lead work on fintech, started an exploration of trying to understand what was happening in financial services. And when we reached out and talked to some of the 80 chief strategy officers that are part of our network of banks and insurers from around the world, and we spoke to them about where they felt like their industry was going, they said that they felt like they were subject to random acts of violence. It felt like fintech innovators were coming out of the woodwork from all angles, but it was really difficult to tell what was smoke and what was fire. So we began a process of hundreds of expert interviews, and I think most importantly, a series of workshops where we brought together leaders from incumbent communities and leading fintechs to effectively fight it out over their vision of the future of their industry, including the future of payments. And so I don't have a crystal ball for the future, but what I can tell you and what I want to run through today are a few visions of how this space could evolve and what impact it could have on payments and payments adjacent businesses. And I think the first and most important thing that we have found that ran across payments but also the broader financial services space was that innovation that was happening in financial services wasn't random at all. It was targeted and it was directed. This was not the direct banks of the 1990s. Instead, these were individuals who were, with their fintech companies, targeting the intersection between where customers, both wholesale and retail, were experiencing frictions, and where at the same time banks and other incumbents continued to have large profit pools. And I think one of the best examples of this is Transferwise. Transferwise looked at the international remittance market between sort of highly developed countries. And they said, this process, it's expensive, it's slow, it lacks consumer visibility and usability. It's a real challenge. And so they figured out a better, simpler way of doing it. They mounted it on an app that lives on your phone and it's easy to use. And now they move over $1 billion every month. And so not an enormous amount in the sense of sort of real-time payment systems, but big and rapidly growing. And I think we're going to see more and more of these sorts of attacks happening in this space, where when incumbents are too slow to respond to the evolving demands of their customers, other people are going to come out of the woodwork to do that. And I live in the United States right now, and I look at the number of folks there who are looking to try and solve what I call the brunch problem, right? How do you and your 5 friends split up the brunch bill at the end of a Sunday? And there's just this enormous number of players coming out and trying to solve these highly niche problems and to build a platform. And the fact that they're being built on platforms means that we're seeing much more rapid scaling when they find models that are successful. But it's not just payment rails that are potentially going to be impacted. It's adjacent products as well, like the consumer finance facilities that exist around financial services. And so I think particularly interesting in this space is a startup called Affirm that's been created by Max Levchin, the founder of PayPal. And what Affirm is a point-of-sale consumer finance facility. And so if I'm looking to buy something from one of their many partners, which happen to be highly sort of millennial businesses, One Kings Lane, Expedia, Eventbrite, Casper, which is this new mattress company that's sort of taking the US by storm right now, and I don't necessarily have the money to pay for that, traditionally what I would do is I would put that on my credit card. But what Affirm does is it is able to, at the point of sale, whether online or in person, rapidly KYC an individual, assess their creditworthiness, and give them really simple terms for a 3-month, 6-month, or 12-month financing facility. And so people have full visibility into how much they're going to pay over the long term. And this has implications for the payment business, both because you're not paying for it with a card means that you're not getting interchange revenue as a card issuer, but it also means that someone's stealing the interest and the fee revenue that you would have gotten from this point of sale credit facility that you would have been extending. So I think it's important to think about payments more broadly around the types of products that we put out and the implications that are coming from people attacking it from all sides. The other thing that's interesting is that I think the experience around payments is changing. And I think that there's nowhere where this is more evident than Uber. And I'm told that Calgary doesn't have Ubers, but I think probably most of us in the room have experienced using an Uber before. And I think what's interesting is that if you look at Uber's marketing material, they say Uber's easy. There are 3 steps. You request, you ride, you rate. And you'll notice that payment doesn't make the list of the top 3 because there's no moment of payment when you take an Uber. It's seamless. It's in the background. And this has implications for payment providers because it means that you pick your preferred card of payment once when you set up the app. And if you, unless you have some reason to want to change, some incentive to want to change, you're just going to keep on using that card for all of the transactions. And so as you see new things coming out like Amazon's one-click payments, when you see people loading these their credentials into wallets and other things, you're going to see an increased flow of payments to the default card. And you're going to see an importance in terms of calibrating things like loyalty and rewards to make sure that you get that default card status, because being a niche card is going to be much less valuable than it has been in the past. Similarly, I think this has implications for the importance of things like card design. If the card lives primarily within a digital form, then I don't really care as much about the brand recognition or whether it has a sort of a cool look and feel when I put the card down in a fancy restaurant. But almost entirely in contrast to this, we see payments becoming more and more back of mind, but other aspects of payments, I believe, are going to become more and more in the foreground. And so when you talk to individuals today, and particularly when you talk to millennials, there's an enormous importance that they place on maintaining their financial health. Millennials in particular have either come of age or grown up in the sort of shadow of the global financial crisis and the ensuing Great Recession. And so when you poll them, they're particularly high on the importance of saving for their future and on the importance of paying down debt. And this is a trend that we see not just in Canada, but around the world. And what's even more interesting is that they expect their financial institutions or their fintech providers to be partners with them in helping them go down the right path. And so when I go out and talk to robo-advisors in this space about the work that they are doing, I see more and more of them building out the sort of tools that have traditionally been limited to private banking and other sorts of high net worth wealth, things like cash flow management, and trying to automate them and provide services around spending and spend management. And I think if you think about where the best time and place for that to happen is, it's at or near the point of sale. What better time to work with pools of data about historical preferences, real-time locational data, and all of the knowledge that we have and are continuing to add to about behavioral finance? Where better to interject yourself in helping people form the right habits and have the right information about their whole financial self to make decisions? And so there's an opportunity here for us to take payments and integrate it more broadly into a person's personal financial experience, and potentially to start to integrate up into higher margin products in the wealth management space. I think that's an interesting idea. Plus, I think just the ability to help our customers do better. But all of this is going to create some challenges for us as well. Because as you see people using more and more different types of payment facilities, as you see people using different types and sources of consumer credit, that's going to have implications for the risk metrics that we've come to rely upon. If you look at the majority of credit bureau risk assessment scores, what you'll find is that they're based on two things. They're based on your transaction history, your actual use of credit facilities, and they're based on your repayment facility. But as you're using more and more different sources of financial service, how are we going to make sure that that information is integrated? And there are further challenges here if you start to think about the information asymmetry that might start to evolve. I talked about the push earlier towards the default card. If we see more and more of that, the default card provider is going to have a higher and higher fidelity of user information, right? And that's going to give them better positioning in terms of making choices about who to market products to and who to assess from a risk perspective. And so all of this, my supposition, is going to drive us more and more towards a world in which risk metrics need to take into consideration a much broader universe of indicators. And you see people today using locational data, using social media data and other things to try and get this more complete picture. And that doesn't mean that the FICO or the other credit bureau scores aren't important, but there's going to be an increasing importance on understanding the broader picture so that we can make choices about sort of who to work with and who not to work with. Now, no presentation about the future of payments would be complete without some talking about blockchain. And I think blockchain is really interesting. I think I've been working in the fintech space for about 2.5 years now, and I've seen a complete sea change in the attitude of executives towards the notion that small Silicon Valley style companies could really be making inroads into financial services. But nowhere is this more true than something that started out 2.5 years ago as Bitcoin, which I sometimes say that it's basically like it used to be talking to people about Bitcoin was talking to people about the internet. If the only thing they knew about the internet was that cyberbullying happened on it. People had the most terrible view towards Bitcoin. Now, blockchain, it's on the cover of The Economist. Every CEO in Davos this year was talking about it. Everyone is super excited about it. And I think that there's reason for that. Blockchain has potentially transformational ability to delayer financial services and to fundamentally redraw the map, particularly on network-based systems like payments. But at the same time, what I'll tell you, as someone who has spent the last year talking to all of the leading thinkers in this space, talking to banks and startups doing interesting stuff in the space, is that I don't believe that anyone has a particularly clear view yet on who the winners and losers will be or how the future will be reshaped. I'm drawing, and we'll be releasing in a couple of months, a report that has all sorts of views of what that future state could look like. But I think it's important to remember that this is infrastructure. It takes time to build. There doesn't seem to be any appeal right now on the part of consumers to using Bitcoin or other types of virtual currencies at a consumer level, no matter how much merchants might like the idea of a zero interchange environment. And so really where this is going to have implications is in the actual sort of establishment of a system. And I think it's really important here to remember that infrastructure takes time to build, and that it's not just about technical stuff. It's very true that the technical standards for distributed ledger technology really aren't fully baked today. You hear people talk about the fact that the Bitcoin network can only do about 5 to 7 transactions per second. That is obviously not going to handle the load of a modern payment system. And so it's important to remember that a huge part of the pace of the implementation of this technology is actually going to be inherently human in nature. It's going to be about getting stakeholders aligned. It's going to be about integrating into legacy technology. It's going to be about establishing establishing regulatory supervision and governance. And then the last thing I'll talk about is an area that I think is not talked about enough today, and that is identity in financial services. I think that there is it is the case that identity is central to every transaction that occurs in financial services, and that it is an enormous source of cost and risk for payments institutions and financial institutions more broadly. But financial institutions have a unique position of regulatory burden in terms of managing the identities that they work with, and also trust of the users. And so I think that there's a really good case for starting to think about payments as being integrated into a broader suite of identity management tools provided by FIs, similar to some of the models that have been explored already in Sweden and Finland. And that this notion of the bank as a provider of identity could actually be central to dealing with some of the forces of disruption and disaggregation that we're seeing on the horizon. And so, just to wrap up, I'll say one thing, and that's there's a lot of interesting stuff happening in the payment space right now, in the financial services space more broadly. And I think it's really important for you to open your minds to the notion that new things could be happening. But at the same time, I'll also urge you to be skeptical. I'm a bearded hipster millennial from a neighborhood in Brooklyn where people think that artisanal pickle brining is a very reasonable way of making one's living. And so we don't necessarily, myself and people like me, you should be skeptical of. I don't know payments nearly as well as you do. But at the same time, I would urge you to think about the future of financial services and to remember an old adage that says that we tend to overestimate the change that we'll see over the next 2 years and to radically underestimate the depth of change that we'll see over the next 10. And so I have no doubt that some of the companies that I showed you on these slides may be bankrupt in 2 years, or their models may have been shown to have faced too many challenges with customer acquisition, or they just can't make the economics work. But fundamentally, I think the ideas that we're discussing here, the potential reshaping of where value is created within the payment space, is actually something that we're going to see change radically over the next 10 years. It's going to require our institutions to be more flexible, but it's going to let us provide a whole new suite of services to our customers and better serve our shareholders and broader stakeholders in the process. So I think it's an exciting time for payments, and I'm looking forward to going there with all of you. Thank you. Good week.
Q&A.
We've got, I think, 5 minutes for questions? 7 minutes for questions?
5. Any questions? Don't be shy.
Mike, I see you in the back there. Ask us a question. Come on.
What do you think the first step towards financial institution-backed identity is?
Now that's a challenging question. I think that financial institutions are in a unique position. They're multi-jurisdictional. They are recognized and trusted by their governments and their broader regulatory authorities. That they are able to KYC to a level of satisfaction, and that they're able to securely store customer data. And interestingly, what we see is that as much as we hear about there being a lack of trust in financial institutions, at a high level, when you start to ask, how much do you trust financial institutions compared to others in terms of actually being able to keep your identity safe or be able to expose select pieces of your information to third parties, that they're actually much more trusted than any other type of institution in the world, including the Apples and Googles of the world. And so I think that, Mike, the real thing here is that you've got this kernel of trust. You've got a lot of smart people who have worked on how they would design an ideal identity system that puts the user in control of managing their identity through a trusted third party. And so I think it's really about starting to stand up pilots that actually start to operationalize those ideas.
I actually believe the Canadian government is already using the banks to authenticate government clients. So when you go into, you want to check on your tax account or something, they will allow you to authenticate yourself through your bank website before you come in. So it's already starting to happen in our market. Yeah,
and there's great stuff happening there. I think at the same time, there's an importance to really think about this broadly. So many of the applications that are being done today are highly niche like that. And they're a great pilot, but they need to fit into a broader whole of identity management that is total around the user, as opposed to being, a suite of a whole bunch of different identity management tools for a whole bunch of different purposes.
You reference in your presentation to the infrastructure build-out, time and costs associated with blockchain and, by extension, cryptocurrencies like Bitcoin. Can you expand a little bit more on that? On A, what are the challenges, and B, whether or not you foresee, and we won't do it, but you foresee the leveraging of existing both correspondent relationships in the financial services world and infrastructure within their operations to assist with that?
I think it's interesting. There's a lot of discussion in this space, and there are those who think that any interaction with the established infrastructure is heresy. But I think that absolutely you're going to see legacy infrastructure get leveraged, and legacy relationships get leveraged, except where you can find a sufficient business case to go around those relationships. And I think that's what people are really worried about, right? I mean, in a world where you can do a point-to-point transfer between any bank in the world, what is the value created by the correspondent players? And I actually don't know the answer to that, because I'm not a deep expert in correspondent banking, but I assure you that it's a question that will be asked and will be closely analyzed. I think even the notion of what is blockchain technology is going to get questioned. From what I'm hearing, the replacement of the ASX legacy CHESS cash equities settlement system that is being undertaken at the moment by Digital Asset Holdings, I know not a payments thing, but the first real build out of large-scale legacy infrastructure using the blockchain, is very likely to use front-end aspects of what's called key management to create the interactions between parties, but it actually won't be a distributed database, most likely. It'll actually be a centralized database. And so you're going to see mixing and matching of some of the learnings that we've had from the past 2 or 3 years of work that have been done in this space that will be used in reasonable applications.
One more quick question. No? Oh, yes. Jerry.
So Kristy, I was really struck when you went through the history by not so much like the innovation, but how much time there was between each of those things that you presented. Like I'm sitting here wondering, so what the heck was going on in those big gaps? And it's kind of easy to sort of discount things that have done in the past, these things are moving so quickly now. But when you were looking at the history, are there any sort of lessons that came up for you that we should be thinking about as we look to the future? Things that actually did work well.
Well, great question, Jerry. Thanks for that. I think when you look at the history, things do go in waves. So, for example, I mean, we started off in a very physical environment with physical cash and physical checks that had to be physically secured and managed. And then that was kind of a status quo until we got to a computer age that started in the 60s. That was kind of the next wave. So it's like a revolution. So we go from the physical to a computer wave, and then the computer wave starts to evolve to the internet wave or the internet age. And now we're being driven, from internet we've got mobile and now potentially blockchain. So it's all kind of going in waves, and those technological advancements, they really propel us into the next chapter of that. So I think we as an industry need to be very cognizant and monitoring, always on the lookout. So what is the next wave? What is it going to be? Is it blockchain that's going to revolutionize the way that we interact between ourselves as the payments infrastructure providers? Or will it be, using mobile in some new way, or doing bioauthentication or Internet of Things? We need to constantly be evaluating those different drivers of the evolution of the payment system. Not easy.
Well, it's to us to wrap it up. So
thank you very much, Jesse. That was
thank you very much,
great.
Kristy. And thank all of you for coming and joining us today.
Good job.
Thank you.